The official currency in Jamaica is the Jamaican dollar. However, the way money actually functions inside the economy shows a very different reality. The US dollar has steadily become the currency of choice for a large portion of society. This influence is seen in business transactions, real estate listings, and even in how the central bank itself manages monetary policy. Across the island, there is widespread acceptance of the US dollar in daily transactions. It is even common to see prices listed in both Jamaican and US dollars in larger cities. In the tourism sector, this dual pricing system is especially visible. Hotels, resorts, and attractions that cater to international visitors prefer to post rates directly in US dollars. Tourists arriving from the United States, Canada, or Europe are far more comfortable paying in US currency. And Jamaican businesses accommodate this reality because the US dollar is viewed as a stable and universally accepted medium of exchange. However, the practice extends way beyond just tourism. Many local retail outlets in major towns will also accept US cash, even when their prices are displayed in Jamaican dollars. This means that an American tourist can land in Jamaica without converting money at all and still function within the economy with relative ease. The real estate sector is one of the clearest examples of dollarization in Jamaica. Properties, whether residential or commercial, are routinely advertised and sold in US dollars. Apartments in Kingston, villas on the North Coast, or parcels of land across the island are often priced exclusively in USD. For sellers, this removes the risk of currency depreciation during negotiations and transactions. For buyers, particularly foreign investors, it simplifies the process by anchoring property values to a stable reference currency. Rental agreements for upscale apartments and commercial spaces also follow this trend. Landlords frequently demand payment in US dollars to protect the value of their rental income. This creates a loop in which Jamaicans themselves, not just foreigners, begin thinking in terms of US dollars for major purchases and long-term investments. The preference for holding wealth in US dollars also extends to personal savings. Many Jamaicans keep part of their assets in USD accounts, both as a hedge against currency fluctuations and as a means of accessing international financial systems more easily. This preference reinforces the dominance of the dollar in the economy, because the more households and businesses think in terms of US dollars, the stronger the cultural and financial link becomes. The local currency still circulates, but in the minds of many Jamaicans, they are always converting their own currency to USD. Officially, the Jamaican dollar is a floating currency. That means that in theory, its value is entirely determined by the supply and demand of foreign exchange markets. However, in practice, the Bank of Jamaica closely manages the exchange rate. It holds foreign exchange reserves, primarily in US dollars, and uses them to intervene in the market whenever volatility becomes too high. These interventions keep the currency within a preferred range, reducing sharp swings that would otherwise destabilize the economy. This system makes the currency behave more like a managed floating currency. The Jamaican dollar is allowed to move, but only within limits that the central bank finds acceptable. When the local currency comes under pressure, the Bank of Jamaica steps in by selling US dollars from its reserves to stabilize the exchange rate. When conditions ease, the bank then purchases dollars to rebuild reserves. Over the last several years, this strategy has provided a foundation of stability. While the Jamaican dollar has a history of long-term depreciation, in recent years it has been much more stable than ever before. The result is that businesses and individuals can plan with greater confidence, knowing that the local currency is not left entirely at the mercy of volatile markets. The way the Jamaican economy is structured makes it naturally dependent on the US dollar. Most of the country's imports are priced in USD. This includes fuel, machinery, consumer goods, and raw materials. Since Jamaica imports more than it exports, businesses need a steady supply of US dollars to conduct trade. The tourism sector, which is one of Jamaica's largest sources of foreign exchange, brings in revenue overwhelmingly in USD. Government debt also has a significant portion denominated in foreign currency, including US dollars. This makes Jamaica highly sensitive to fluctuations in the exchange rate and further deepens the reliance on the US dollar. Businesses have adapted to this reality by holding US dollars whenever possible. For a company that imports goods or needs to service dollar-denominated loans, keeping assets in USD reduces risk. This practice also shapes how contracts are written, how invoices are issued, and how financial planning is done. In many ways, the Jamaican private sector already functions in a dollar-based mindset. The official unit of account may be JMD, but the operational unit of account is often the US dollar. Yet, despite this heavy reliance, confidence in the Jamaican dollar has not disappeared. In fact, recent years have seen a strengthening in how Jamaicans and international investors view the local currency. The stability created by the Bank of Jamaica's policies has encouraged the government to issue bonds denominated in JMD. This is a critical point. Investors, both local and international, would not purchase Jamaican dollar bonds unless they believed the value of the currency would hold steady over the life of the instrument. The success of these issuances demonstrates that the Jamaican dollar has reached a stage where it is trusted as a viable medium for long-term financial commitments. The willingness to purchase JMD bonds shows that Jamaica's monetary framework is gaining credibility. This credibility reduces the pressure for a rapid move toward full dollarization. It highlights that while the US dollar dominates many aspects of the economy, the Jamaican dollar still plays an essential role and is far from obsolete. Instead of losing ground entirely, the local currency is finding a place in which it can coexist with the US dollar under a carefully managed system. Jamaica stands in contrast to other countries who have fully dollarized their economy. The country has not abandoned its own currency, and the government has made no official move toward adopting the US dollar as legal tender. Instead, Jamaica sits in the middle of the spectrum. The US dollar is deeply embedded in the economy, but the Jamaican dollar remains the official unit of account and a functioning currency. This hybrid position brings both advantages and challenges. On the positive side, the heavy use of US dollars brings stability to transactions, especially those linked to international trade and investment. Businesses that deal with imports or exports can price contracts in USD and avoid the risks of currency volatility. The dominance of USD also helps to attract foreign capital, since investors are more comfortable with a currency they know and trust. On the other hand, the reliance on USD reduces the flexibility of Jamaican monetary policy. The Bank of Jamaica's ability to control liquidity, interest rates, and inflation is constrained by the fact that so much of the economy thinks in terms of US dollars. Decisions made by the Federal Reserve in the United States ripple into Jamaica in ways that local policymakers cannot control. The more dollarized the economy becomes, the less independent Jamaica's monetary framework will be. Looking at the present trajectory, the question arises whether Jamaica is slowly moving toward full dollarization. The government has not announced any plans to make such a move, and the Bank of Jamaica continues to strengthen the credibility of the JMD. At the same time, businesses and individuals are already acting as though the economy is dollarized in practice. Real estate markets, tourism revenues, and import contracts are already USD dominated. This creates a reality in which the country functions with two overlapping systems. The future of Jamaica's monetary path depends on how sustainable this dual system proves to be. If the Bank of Jamaica can continue to manage the exchange rate effectively and maintain confidence in the JMD, then the local currency will retain its place. If economic shocks weaken that confidence, the role of the US dollar could expand even further. What is certain is that the US dollar will remain central to Jamaica's financial system for the foreseeable future.